Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Today's video is two-part video, and the first part I'm going to talk about 5 different companies that are dividend growth stocks. But before we do that, I want to talk about the importance of why I always talk about dividend growth investments, okay? And there is a reason. It's not just because I just like companies that pay dividends, okay? Obviously everyone likes that, but at the same time I like companies that grow that dividends. So what I'm going to show you now is some of the reasons why it is important to look for companies that are increasing their dividends. But look at the portfolio today, £69,000, okay, give or take. That's where it is right now, and we still have £500 to add next week, early next week, inshallah, just to kind of max out the overall the ISA account. So let me just quickly show you. We only have 563 pence to actually add by basically before next week Thursday, inshallah, and that's what we're going to do, inshallah. We've got the money, but I just need to add it to the account. So yeah, that's where we are with the portfolio. There's obviously a few changes that I've made recently. If you follow us on the Discord, then obviously I've mentioned that to you guys, any dividends that we received and so on. If you're not with us on the Discord, please join us. Join the Patreon account first, then you can join us on the Discord, inshallah, where you can meet, like-minded people that have been helping each other, mashallah, and that's what we're doing. Right, so I'm going to talk about first of all why basically dividend growth investing is important. Okay, 5 reasons to be a dividend growth investor. And the first one, this is an article written by the Simply Save Dividends website. And the first thing they talked about was the dividends are a major source of long-term market returns. And what they mean by that is basically the overall returns, okay, with dividends and without dividends. Now, in the 1940s, okay, it contributed. Dividends is the gold kind of color. The blue line basically is no dividends. So that's the returns by the S&P 500 without the dividends, and with the dividends is this, okay. And as you can see, it had a major contribution to in the 40s, in the 50s, in the 60s, 70s, all the way to right now. I don't know what happened in the 2000s, but as you can see, every single century basically, okay, it had something to do. Dividends were actually a major contribution, contribution, if I can talk, to the S&P 500 total return. So that's the first one. Then they say dividend growth stocks have outperformed the stock market over time. And look in this chart here, you can see the returns, and you can see dividend growers, okay, and initiators basically return about over 10%. The dividend payers, so these are companies that pay like the Rio Tintos or whatever that pay dividends, but they cut it here and there, okay, return about 9%. No change in dividend policy, 7%. So dividends and non-payers 2%, and dividend cutters and so on. And you can see the equal weighted S&P 500 index return 7.7 returns, and this was the period of 1972 to all the way 2017. So that's the article slightly old if you think about it, okay, but nevertheless it actually shows you the importance of why dividend growth investing is important. Dividend growth stocks can help ensure safe retirement no matter how long you live. You get that passive income, you get that 4% basically, instead of just withdrawing 4% of your portfolio, which is the FIRE movement, if you like, okay, and basically selling your own stocks every single year. You don't have to do that with dividends. Dividends will come in regardless. As long as you have a dividend growth portfolio, your money will come in regardless, okay. So you don't have to sell it. You don't have to sell when the markets are down and so on. Embracing dividend growth investors mindset can help you avoid the biggest cause of market performance, and that is the human emotions. And this is really important. We underestimate this. In the last year and a half, it really genuinely helped me. The fact that I wasn't worried about what was happening in the market because I was not chasing, these high flyers, if you like. I just focused on quality companies that pay dividends and increase that dividend. And when they were down, I actually got excited and I bought more of it. And you've seen me do that in the last basically 2-3 years now. And again, it's really important that human emotions is basically what gets us into trouble as a retail investors, if you like. Okay, and the final thing they talk about here, okay, I'll share the article if you want to read the whole thing. And being dividend growth investors can help you earn return no matter what stock prices are doing. Again, it's exactly the same that what we just talked about. The stocks were down, you didn't have to sell. Like if you're doing the fire movement, you have to sell about basically 4% whatever withdrawal rate and so on. But with dividends, you don't have to sell. If the markets are up, if your markets are down, you still get your money, and you don't have to worry about the price fluctuation of these things, because you get paid in the end of the day. So just today I get paid £20. Okay, I didn't have to do anything. Okay, the fact that markets are up today is, yeah, it's fine, it's nice, but I didn't have to do anything to actually earn that money. Okay, I just bought this stock, I hold the stock, and then that's it. I just got paid £20 just today. So that's the kind of thing, that's the reasons why I actually like dividends. And what I'm going to do today is I'm going to give you 10 different companies in two-part video. Okay, so the first part I'm going to focus on 5 different dividend growth stocks, starting from 11% to 15%, and then the next one will be 16% to 29, almost to 30%. So that's what I'm going to do, inshallah. So like I said, the next video will also be released either tonight or tomorrow, inshallah. And the first company we're looking at, Air Product and Chemicals. So now we talked about dividend growth companies. The yellow is what I need you to focus on here, okay? And as you can see, this is one of the biggest companies that I have in one of the biggest holdings that I have in my portfolio, Air Product and Chemicals. And as you can see, they have a 2.5 dividend yield, and basically latest increase was 8%, and the 5-year growth rate is 11%. The payout ratio is not that, well, it's not huge, but at least it would have been nice if it was slightly lower. But 40 years of increase in that dividend. So this company is a dividend aristocrat. They take pride in paying this thing, right? They will pay you $7 for holding one stock of that company, and their safety is 95%. That means the company has basically enough money to pay off that dividend, no issues whatsoever, okay? Profit margins, things like that are fine. Free cash flow is not as much as I would have liked, but free cash flow, this company is growing in the long run, okay? And the total returns and so on. And then you've got basically the discount is discounted right now, so it's slightly cheaper. I'm going to mainly focus on the dividend side of it because that's my pain point. But you can have a look at the rest of the information that's also there. The next company I want to look at today is Danaher Corporations, okay? This is one of the, basically they sell medical products and services. And as you can see here, they have 180 billion market cap, so they're not a small company at all. But this company has increased the dividends recently by 8%. But the dividend yield is actually quite low, 0.43. But they have increased it by 8%. And the last 5 years, they have a compounded annual growth rate of 12%. The payout ratio is only 9%. And dividend growth is just 5 years. So they have increased it for 5 years non-stop. And if you look at here, the annual payout is $1.08. Safety is 73%. And when you look at the free cash flow, $7 billion, that covers enough. They are fairly valued at the moment. The next company that we're looking at today is Estee Lauder. This is one of the makeup companies. They own so many different brands. Basically, they monopolize that market. So every single company that sells all of these perfumes, makeup, all that beauty stuff, they own it. Okay, $87 billion market cap. It has a wide economic moat, and as you can see here, their dividend is just above 1%. Latest increase was 10%, and the 5-year growth rate is 12%. The payout ratio only 47%, and 2 years of increase in that dividends. Okay, it's not a lot, but it's getting, well, it's at least it's starting point, right? The annual dividend is $2.64, 70% safety, which is really good. And they have about closer to $1 billion of free cash flow to pay off that dividend, as well as obviously being a discounted right now about 10%. So that's the third company we're looking at today. Again, the fourth company we're looking at is Moody's Corporation. This is very similar to S&P Global. They're one of the rating companies. They're one of the debt-based rating companies and so on. They work with a lot of the biggest companies out there. They have monopolized that market. And if you look at it right now, they've got about $55 billion market cap. And currently, the dividend is above 1%. And as you can see here, latest increase was 10%. Again, really good. So they're increasing. Look at this. So 8%, 8%, 10%, 10%. So they increased it that much recently. And in the last 5 years, they have been increasing this on average about 13%, which is really good. The payout ratio is only 33% and 13 years of increasing that dividend. The annual payout is $3.08 and the safety is 83%. Okay, and looking at here, you've got about $1.1 billion of free cash flow to cover that, and it's fairly valued at the moment. The last company we're going to talk about today is this one here, is the S&P Global. So again, very basically they're both in the same industry, but this one obviously is slightly bigger. And if you look at the dividend yields, are more or less the same, 1%. The latest increase for this one was about 6%, but the 5-year growth rate is about 15%, which is really good. 30% in terms of payout ratio, 49 years of dividend history, basically increasing that dividend. That means this company will become this time next year, they will become a dividend king, which is a company that has increased its dividend for 50 years or more. So the companies like Procter & Gamble, Johnson & Johnson, this company will join the greats basically when it comes to the dividends. And annual payout only $3.60, which is, I say only, but that's $3.60, which is really good. 99% safety. Amazing, right? $2.5 billion of market, basically of free cash flow, and they are fairly valued right now. Their price expectation basically is about $370, and right now is about $347. This is one of the reasons I've been basically adding to the company for lately. So these are quality companies, because not every company can pay dividends and increase it. They must have a growing revenue. They must take a lot of the revenue, and basically that becomes their net income, which is then the free cash flow, if you like. The free cash flow, I've got a video coming up about free cash flow and why it's important. So I'll let you know that why it's really important. But genuinely, it's one of the most important things. If a company has excellent free cash flow, that means they take in some of the money they made, okay, and put it into their free cash flow. So imagine you own a small business, right? And you're spending less than you're making. So you're making a lot of profit, and on that profit, you're keeping it for yourself. What can you do with that? You can actually, basically reinvest into the business, pay off any debt that you have, and basically build a new building for whatever it is you need for your company to basically grow. You use that money. And that's why I basically really genuinely like companies that have a free cash flow yield above 3% or 4% or 5%, or free cash flow generally that is enough to cover the dividends and so on. So I'm going to stop the video there because I don't want to make it any longer. And then I will record the second video, inshallah. I will release it within the next 24 hours so you have the full picture, inshallah. The next 5 companies will start from 16% to 30%. And all of them, I promise you, are quality companies. If you like this type of content, please like the video, subscribe to the channel. Let me know if you have any questions. If you haven't actually joined us on the Discord, please do so, because it really genuinely motivates me and helps the channel obviously grow and get bigger, inshallah. And we'll try to help as many brothers and sisters out there to get into investing, and especially investing in the stock market. I've got loads of videos I've been planning last few days. Inshallah, I'm going to start recording them as much as I can whenever I get time, inshallah, just to kind of, just rather than talking about stocks, I want to talk about a few other things. So inshallah, I will be doing that. So if you like that type of content, please like the video, subscribe to the channel. Let me know if you have questions. Have a wonderful day. Assalamu Alaikum.